How to trade options Part 2. How to read an options chain. Bid. The bid is the price you can sell the quoted option for with a market order. It is the price of the highest limit order that a buyer from any exchange is willing to spend to buy the contract you want to sell. Ask. The ask is the price you can buy the quoted option for with a market order. It is the price of the lowest limit order that a seller from any exchange is willing to sell the contract you want to buy. Volume. This is the number of option contracts that have transacted today on this specific contract. Contracts with a volume of less than 100 per day might see larger spreads between the bid and the ask prices. Open interest. Option contracts which have been purchased, and are still available to be exercised, are counted as part of open interest. This number includes options that are initiated as both buys or sells, so the open interest includes both long and short positions. Strike price. This is the price at which the option buyer can exercise the right to buy, in the case of call options, or sell, in the case of put options. Each option contract has a strike price and an expiration date. Expiration date. Beyond this date, the option contract cannot be exercised. Up until the close of trading on this date, the option buyer may choose to exercise their right. Options which expire in the money are automatically exercised on the day after trading is closed. Vega. This option Greek measures an option contract's sensitivity to changes in implied volatility. If the implied volatility of an option increases by 1 percentage point, the option contract should increase in price by the Vega value, all else being equal. Theta. Another option Greek. Theta measures an option contract's decline in price over the next 24 hours attributable to time decay. Theta values rise as the day of expiration gets closer. Delta. This option Greek is the measure of an option contract's sensitivity to changes in the price of the underlying security. If the underlying stock, or other security, increases by $1 in price, the option contract should increase in price by the delta value, all else being equal. Gamma. This is an option Greek related to delta. It is the measure of an option contract's change in delta score if the underlying security increases by $1. If the underlying stock, or other security, increases by $2 in price, all other considerations being equal, the option contract should increase in price by the delta value for the first dollar increase and by the delta value plus the gamma value for the second dollar increase. As a result, gamma measures the potential acceleration of option prices. At the money, ATM. The option contract with the strike price closest to the current price of the underlying security is said to be at the money. The ATM contract is subjective when the price is equally between two strike prices, but it is common to consider the strike that is currently in the money as the option someone would designate as at the money. In the money, ITM. In the money, ITM, options have intrinsic value, meaning the difference between the option's strike price and the underlying asset's market price is favorable, resulting in immediate value if exercised. Out of the money, OTM. Out of the money, OTM, options have no intrinsic value, as the strike price isn't favorable compared to the market price. It would be worthless to exercise an OTM option. Factors to consider when opening an options trading account. Customer service. As an option trader, you'll want a broker that can be accessed online or over the phone to give quick answers on things like balance changes, margin requirements, margin call notices, or other unusual notifications. A broker representative should also be available to clarify trade-related issues, especially on topics of expiration, assignment, and closing out spread trades. Fees and commissions. Some brokers charge commissions on option trades, even if they don't charge commissions on stock trades. The costs of commissions and fees can vary significantly as certain brokers prefer to remove some or all commissions from the customer transaction. For a better understanding of the fees charged by the best options trading platforms, this guide can serve as an excellent resource. Account minimums. For stock and option trading, opening an account with a minimum deposit of several $1,000s has become a thing of the past. Most brokers will allow customers to open an account without funding it right away. Research and trading tools. The best options trading platforms supply fundamental, technical, and even proprietary research for traders. Online web-based brokers tend to offer a more sophisticated toolset for trading than mobile-based apps used by some of the newer brokers such as Robinhood, Webull, and eToro. Sophisticated charting tasks are more productive when performed on software-based desktop trading platforms. The same is true for complex order types such as conditional or branching orders. Educational content, highly informative articles, videos, online classes, interactive quizzes, and more are common nowadays for many online brokers. The most popular broker platforms are often featured by option traders who create educational content on social media platforms as well. You shouldn't have to struggle finding educational content for your trading platform, so if you do, take that as a warning flag. Demo account. The best options trading platforms include demo accounts so that their customers can fully understand how options Greeks and changing market conditions affect options prices. These practice accounts allow a trader to make simulated trades based on the same platform interface they will use to make trades. This can be very helpful for traders just getting started trading options. But not all brokers provide this tool, so beginner-level traders may want to check out the Investopedia simulator if they have no tools available from their broker. How much money do you need to trade options? Broker requirements can vary from $0 to a few $1,000s. Most brokers require account sizes of $2,000 or less. However, trading an option account with only a few $100s is not prudent. Option trading strategies work best when a trader employs only a small amount of their available capital on any one trade.
Friends, thanks for watching. Please subscribe my channel for more videos.